Welcome back, the accounting gurus, may I say now, because you are fundis. You're becoming a master at your accounting, aren't you? Well, take it from me. There's no shortcut in accounting. What am I referring to? You have to learn your ratios. There's no other route to success. You have to take those ratios and you have to learn them. Watch. If the ratio says, what's the gross profit on turnover? It's giving you an indication of what you have to do. You take your gross profit over your turnover, because you're expressing as a percentage, 100 over 1. So calculate the ratio, number one. That's just one part of your problem, or one part of your challenge, rather, not the problem. There's no problems in accounting, there are only challenges. Right. Now, how would you comment? What does this ratio tell you? It tells you that the markup on your selling price, it tells you that the markup that you have achieved, now you need to compare that to what you set out. For example, if you set out to achieve a 50% markup and you are only achieving 40%, then certainly there's a problem. There's something that needs to be investigated. What's your gross profit percentage on cost of sales? Once again, gross profit over cost of sales times 100 over 1. Again, if you've set out to achieve 100% and you are achieving 60%, what's the problem? What needs to be addressed? You must compare it to what you set out. Obviously, if you set out to achieve 100% and you are achieving 100%, everything is hunky-dory. But if you are not achieving the intended gross profit percentage on cost of sales, what are the possible reasons for this? One, there may have been seasonal sales, or there may be cash discounts, or there may be incorrect pricing, and hopefully not, there may be theft. But yes, that's a possibility. So you can see that one is to do the ratio, and two is to be able to comment on the ratio and say, okay, I've done the calculation. What is this ratio telling me? What am I supposed to do with it? Your net income on turnover, your net income over turnover, times 100 over 1, because you're expressing as a percentage. It's a portion of net income in every rand of sales. Remember, very important, compare to previous results. That means from last year to this year, what has happened? If there's a drastic change, then it needs your attention. It needs the attention of management. Then something is going wrong. We need to check it out. And that's the purpose behind our ratio analysis. What's your total expenses on turnover? Once again, total expenses over my turnover times 100 over 1. It indicates the absorption rate of expenses on turnover. A lower rate is more favorable. Obviously, the lower your expenses on your turnover, the better for you. It means that your expenses are well controlled. It means that you're keeping your expenses in check. It means that there will be more profit available. And that's what we want to do, maximize profits. Again, don't forget to compare to previous years so that you have a clear indication of what is happening. The solvency ratio. If you remember, when we talked about solvency, we talked about the ability of an enterprise to meet all its liabilities. The ratio, total assets is to total liabilities. There's it. Total assets is to total liabilities. The ratio is used to answer the question whether a business is solvent, an indication of the solvency situation. If your assets are more than your liabilities, the business is solvent. The higher the ratio, the better the solvency. If your solvency is close to 1:1, there's a possible risk of insolvency in the future. Be careful of that one. The current ratio is current assets is to current liabilities. Remember, what did we say that this ratio is all about? The ability, when we're talking about, this one falls under liquidity, the ability for a business to meet its short-term debts. It determines the liquidity of the business. We compare to previous results. If the ratio is very high, it could also mean excessive amounts of money in current assets. It would be rather, a better option would be to invest in another form of investment where you could earn a return. Okay, that's not all the ratios. I'm sure you want to know more. So, if you want to know more, stay with Ashraf, stay with Matrix Uploaded, because we'll be back with you in a while.